Well, yet another management from the textile space. This is on the retail front. Shivendra Nigam, the CFO of Cantabil Retail, has been joining us. Firstly, sir, in FY23, the company crossed the 500 crore revenue mark. Now, going forward, what are your expansion plans and what is the kind of revenue growth that you're targeting for the FY24?
Thank you, sir, and good afternoon. So yes, we have crossed the 500 revenue mark first time in the year FY23. So as we said earlier also, we have a very clear-cut expansion plan. We are going to every month, we are opening 5 to 6 stores. So with this space, in next 2-3 years, we have been targeting to have a company, 1,000 crore revenue company, with a 70 to 80 stores in every year we have been expanding with a good share of e-commerce as well. And the same store growth we are also expecting. So as far as expansion and revenue goes, in next 3 years, we are targeting the company to make a 1,000 crore revenue company.
Okay.
So, sir, we completely understand that earlier actually we were speaking to Monte Carlo and we completely understand that both of you cater to different kind of products, but they were telling us that the on-ground demand scenario is not that strong at this moment. So, what is your take on the demand scenario that we have been that you have been seeing in the market currently?
So that's correct. For last Q1, last financial, if you have to take, the demand was surging and it was a good demand. But after that, the demand was quite flat. Flat in the sense that like we are growing continuously, but probably slightly lesser what we were expecting at overall retail market. So April and May for this year was also flat, but June where the market has started picking. And going forward, we are expecting, since the fashion has been most correlated with the festival demands and other things. The moment second quarter will be finishing us from the August onwards, September onwards, we are expecting very good demands in the market, and our targets are very much, and we have been heading towards those targets. So we are expecting from second quarter onwards that demanded will surge, and that would be permanent in nature. So the temporary phase, because last time we have been saying inflation sides, interest rate sides.
Yes, I think there's a bit of a technical glitch coming in there, but like the management was highlighting as of now, Cantabil as well, that there seems to be some bit of a subdued demand coming in there. Both the managements on retail side. So yes, okay. Mr. Jain is back. Mr. Jain, sorry, you could continue. I'm sorry, I beg your pardon. Mr. Nigam, you could continue with what you were saying as well.
Okay, yeah. So we were expecting to demand. So the sentiments have been settled down. Now we are not expecting much rate hikes in terms of interest rate. So overall, from the consumer point of view, we are expecting from second quarter onwards things would go fine. Not only for the company but industry also, we are expecting the growth is being there. We are continuously expanding. So overall, result the same store growth we are expecting to some percentage should go what we have been achieving for last 4-5 years. And going forward with the e-commerce surging for the company as well as in the market, we are expecting good results from the second quarter onwards for the overall.
Right. Mr. Nigam, there's one more thing that is shaping up also, just in terms of obviously the demand trend is one thing. But, we can see that coming in even in the end of season sales, right? Because they have also started a bit earlier this time around. Has that brought back any of a demand for you, or even after that, seeing that sluggishness still continue? What is that shaping up like right now?
So overall, we did not prepone much of our schemes. So overall, for last many years, we have been consistent in our scheme. But we saw the brands probably to take the market share because the customer is not coming up. So probably EOS has been, for the other brands we have seen slightly early. But overall things are fine. So rightly, when the market has not been behaving absolutely to the, as per your expectation. So brands have been EOSS kind of things or more discounts. Other brands we have seen the other brands are also giving this one. So slightly early, you can say. But overall for us, for the company as a whole, I can say we have been on our existing policy. We have not preponed any of the scheme. And overall results are reasonably balanced.
So, sir, recently you had opened 3 stores in tier 2 cities like Punjab, Uttarakhand, and Madhya Pradesh. So, what is your store expansion plans going forward? And if you could also give us some breakup of which regions you're focusing and which tiers are you focusing when it comes to new store openings?
Correct, sir. So, sir, if you have seen, we have been continuously expanding for last 3-4 years, not going forward only last 3-4 years, because we have already Northwest brand earlier. So Delhi NCR, we already having 85 plus stores, and tier ones has been tagged for us. So now we have been going forward tier 2, 3, and beyond. We have been expanding. Earlier also, tier 2, 3 expansion has been proven to be a very successful story for the Cantabil, and going forward, we have been opening in the same way. So not only Punjab, Haryana, we have been present in the 19 states and 220 plus cities, all tier 1, tier 2, tier 3 cities. So going forward, also the expansion plan would be mainly in tier 2, 3 and beyond, and wherever the gap in tier 1 cities, because tier 1 mainly counted 8 big cities, including Mumbai. Mumbai we are less, and we are continuously expanding in Mumbai as well. So tier 2, 3, 4 demand, and the new young aspirant customer is very much want to associate with the brand, and Cantabil is a perfect brand for them. So going forward, tier 2, tier 3, tier 4 will be the majority expansion, and tier 1 would be the gap, wherever the gap is.
Okay, so majority of expansion that we could be expecting will be from tier 2, 3 and 4 cities from the company. Thank you so much, Mr. Nigam, for joining in with us this afternoon, giving us an understanding in terms of obviously the demand trends, plus what is your expansion strategy going forward. Thank you so much.
Thanks.